Hello and welcome to the Wednesday check-in brought to you by David Gokhshtein and the Gokhshtein News Network. I am your host, Landy, and today is March 11th, 2026, and we are going to look at Bitcoin to start today. We did have some economic numbers come in as well, and then we'll take a look at some commodities and then, of course, the U.S. stock market. So starting with Bitcoin, it did head down to one of the important areas that I talked about. For immediate continuation, I was looking for price to stay closing above around the $70,000 region, and we got fairly close to that. Realistically, 68.5 on the lower term timeframes is what it needs to close at in order to kind of still plumb the highs here and have a potential to break out to the highs. In this case, the range highs, or the deviation of the range that is the primary range around that 72.2 region. We were looking to 74 to 75. We got 74.1. Anywhere above there, looking 78 to 80, which is right around where the 100 period EMA is on the daily. Now, of course, that would require Bitcoin to start closing back above the 74 to 75 range to go test, 78 to 80 and get above the 50 period simple moving average and the 55 exponential there. And, so far, it has put in the higher low. Not too much has changed since we talked on Monday after close. So now it's just seeing if this ends up being a lower high. And how would we know that? Well, we'd know that on closes below $69,000, but realistically, you'd need to see it close below the open from Tuesday, and that would be at around 68.3. So if you start to see 68 break down, that 68.5 on lower term timeframes, take a look at 68.3 to 4. That's going to be the area that, if we start getting in towards the close of day, would set a lower high and then endanger this higher low. And as long as Bitcoin is trading above around 65 to 65.6 here, sideways and up is the name of the game towards the overhead resistance, which is now, the range highs at the upper second standard deviation at that 72.2 is exactly where the upper second and the 50 period simple moving average is. Now, when looking at looking at the local range here, we've got the weekly overhead on any kind of a breakout above 74 to 75, not just a swing to like 75, but closes above here, then I would start to look for 75 to 78, which is right around the weekly over here. Now, of course, we had dailies that dipped below here, but the weekly closed around 78 here to the actual low that was broken down from at around 80,000, 80,500. So 78 to 80 would be fair game to the upside. And anywhere below, right around $65,000, the swing low here, then we would be looking back to the lower low area, the retest of the close open on the daily here at around 62.5. And if we started to see that fall apart, that would be expansion to the downside, likely running the $58,000 to $60,000 area by the low. Anywhere below there, mid 50s to low 50s is the name of the game. 55 to 56 initially, and then anywhere in between down to 52.5. Below there, looking 48 to 50 as the next big area. And kind of getting a little bit of a feeling that this is just going to bore people for a little bit longer, to be quite honest. Daily has flipped back up for Stoke. If we were to take a look at moving averages, like throw some more moving averages on here, let's get rid of the Bollinger Bands here. We can throw a 5 and a 21 on as well. Kind of see where things are. Yeah, so we had the 5 just cross over the 21, kind of squeezing price between that faster exponential here into the 50 period simple and the 55 at the high. So it's either going to break down back to the last higher low at 65.5 and then test 65 to 62.5 on the bottom side of the range, or it's going to try to pop out the top side of that 55 and go for that 78 to 80, or somewhere in between 75 to 78. Now, I will follow up with longer term timeframes on Friday for the Friday wrap up. Let's go ahead and take a look at commodities. We're actually going to start with oil because everybody's an oil expert now. And they only really want to pay attention when, things actually get exciting one way or the other. But we've been talking about this for a while with oil, and that is not what I'm looking for. I'm looking for commodities. Let's go ahead to WTI, and we can see that we are getting, the type of move that I talked about, and that is a move to a higher low structure that tries to push back in towards the 90 to 95 range. Again, now we talked about this on Monday, that it was on it would be on closes below 75 bucks. I would start to look towards the $70 area, upper $60 area to $70 a barrel area. Anywhere above 95, the actual open up here at 98 to 100 is fair game, up to around 105, where we're going to see that upper third standard deviation come into play. Now, this is very highly volatile. We've got 100 over 100 for BBWP. And that does mean that, it can still play to the highs, but I do believe that we're going to see a wider correction sooner than later, or a consolidation. We had the big sell-off right back down to the $80 region on the low. Next day came in at 76. And now it's all about, 76, almost 77. Now it's all about, can it hold this low? Then it has the opportunity to keep testing higher or start to grab liquidity from above 95. If it fails to get above 95 or, 98 to 100, I would start to look for this to consolidate and just watch that low at around 75 to 76 and kind of take it from there. This is looking like it does want to come back down. It might try to line back up for a retest of those highs for momentum and stuff like that. But even if it does so in the context of this move being really expanded, it can continue to test those highs, but very likely going to be, very likely going to favor the sellers, fill in short side up there on any kind of retest of the high side area, even if it were to swing higher into the wider zone, that big monthly, quarterly zone by, between 115 and around 130. Now, it is going to look a little bit different at Brent, but I prefer WTI. It's a little bit cleaner. All right, so let's go take a look at gold. Gold, we have, right about now, we've got the potential for this to set a lower high. In the context of declining volatility on the daily, has been sideways and up. And this is kind of what I'm talking about with oil is, you saw the big run up. Now, granted, this was a sustained move up, but then the massive sell off and then just slowly marching its way back to the upside here and then consolidating or going back into a price compression while still being sideways and up, catching a good bid each low. Now, if it does put in a lower high, it's going to occur, the lower high being at that 52.40 or so. We need to see closes back above there for gold to go up and test, 53 to 54, especially that high that came in right at 54.20 on the close open, and then potentially get expansion back to the all-time high at 56, and then start marching towards, 57 to 58, and then, eventually 6K. But if it does paint a lower high here below 51.50, it's crazy. Then I would watch the low side structure here around 5K. If it does drop 5K, look into, upper 48 to 4,900. Silver, same deal. And this already put in the lower high though. And we need to see close back above 90. Then we can start looking, back towards 92. But realistically, the area to beat is, around 95 to 96. On expansion, that would put it, that 98 to 102 level in play again, and potentially more. And now it's about watching around $80 to the downside, 79 to 80. You can even rope in 78. So 78 to 80 by that lower first, anywhere below that lower first. And I would start to look back towards, this zone down here, 70 to 74. Now, if it does lose 70, it's probably gonna hit mid 60s pretty quick on expansion, because that would be expansion into an area of support and then through it. And that's where we'd be looking at mid 60s, but potentially even lower 60s. And natural gas did get a little bit of a buyback, and it is a bit of an uptrend here in the context of longer term time frame downtrend. This is where, anywhere below 350 isn't really interesting. If it gets above 350, beware of spikes to, 380, 390, and potentially $4, but likely very rejective. Unless it can sustain the trend, to be quite honest. Let's go ahead to traditional markets here. Dow, lower high is in, and the lower high to beat now is going to be, this is a mess. Let's just go ahead and get rid of the bands. We'll put them back on here in a second. Lower high to beat. Well, one, we need to see it trading above 48, 47,850 rather, and then taking out 48,220. That would break the downtrend here. Otherwise, looking lower, anywhere below the 47.2 area, and then 47,000 even. Then we can start looking back to the 46.5, 46.6 level. Anywhere below there, looking generally down to an area between around 45.5 on the low side, which is a big weekly level, to around 46,250 or so. And again, this is where you need to see, we need to see this daily break at 48,220, and that's not bright enough for me. Could be this monitor too. Let's go and use that. And we don't really need this because we already have 48,431 to 48.5 kind of as a general area overhead. So break the downtrend above 48,220, and that would be, a daily trend change. It was a strong buyback off of the 46.6 level, and it's kind of where we were looking, 46.5 to 46.6 in this wider zone. Just beware that, this is a strong daily downtrend, and we'll talk about the weeklies on Friday, but we don't have quite the same look on NASDAQ, as we did get some rotation back into risk for a couple of days, and then a little bit of a rotation continued into risk, even though the wider markets were selling off. And tech, NASDAQ held up. Tech held up, and we've got a big daily level of interest sitting right on top of a weekly. So if we do see the lows lost in this consolidation, where realistically we need to see 25.4 to 25.5 beat to the upside to really go retest the high side structures, around 25.8 to 26K. If we see 24.2, 24.3 to 24.2, the top side of this weekly and this daily zone that's really important here dropped, I would look to, 24,000 to the, 23.7 to 8 area, possibly even 23.5 to the downside if it gets rolling on expansion. And SPY, we did see it recover above 675 and hold it. And we already hit one of the primary targets to the downside that I was looking for. Now, of course, I have the bands off and the moving averages off right now. But originally, what I was looking for on any kind of a break of 675 was between 665 to 655. And that is where we had some important areas of interest. We got 662, and we do have a lower high. The lower high on the daily to beat now is going to be 683. We can actually make this a purple area so that I remember what number that is. And in this case, 683 to 685, I would say would look good to go and start testing back up to 688 to 690, and then try to recover 693 to 695. But realistically, if we start seeing 675, look right to 670 to 669, which remember is this low over here, and a bit of the high side structure over here. Now, when we got the move down below, if we do see the 670 region dropped, the mid 660s down to 660 at the weekly here is fair game. And anywhere below there, we're looking, essentially 655 to 650 to the downside for continuation. But breaks back above 683 would look good. Reclaiming and holding the bottom side of this range at 675 on a close, better than not, but just be aware of the risk of that downside should it be lost again, and especially if we see 670 dropped. And this is where things are very interesting for VIX and this kind of this buyback into this channel. And I think I mentioned this on the breakdown with David this morning, which, by the way, you can catch me in the mornings at 12:15 p.m. Eastern Standard Time, 9:15 a.m. Pacific Standard Time on the breakdown with David Gokhshtein on his channel and his show, where I'm on there every morning now. For me, it's every afternoon for him. But, kind of breaking down markets and talking with David. But, I talked to him about, had a good conversation on the Wolf Bitcoin space the other day where someone had brought up, VIX above 30 is generally where you're going to see a lot of bidders come in because they're going to average down. Even if we do get a wider move down, you start to see that liquidity averaging in to, value essentially. And one of the, key things that we saw is we did see oil, pop up again and test the overhead resistance, right? And it's getting in there now towards 95, right? So 90 to 95 bucks above there. It could go for more, 98 to 100. And then up to that 105 and more. But, gold and silver took a step back. And, of course, markets took a step back. Along with that, we saw that, yields rising. We've got some selling going on in the bond markets, but we also, at the same time, saw Dixie going up. So what does this mean? It means that a lot is rotating cash, and we're going to wait to see where that goes next, obviously, into the oil trade, but that's not where all of the money is going. Obviously, we saw that crypto did okay as well. But, we're in this unique time where you do want to watch where the liquidity is flowing, right? And I would say that a risk-off move, a more risk-off move would be if we start to see, the dollar dropping and we see, yield dropping for U.S. treasuries and bonds. So I would just watch the risk rotation and whether it's, risk on or risk off. And I think it's a little bit more complex than that, today, right? In this kind of day and age, realistically, since the last bear market in 22 for, cryptocurrencies. And then, of course, even, indices and equities, right? Like things have changed and we're starting to see that worldwide, right? And every single market is linked. These are global markets. And of course, we're only taking a look at Bitcoin on a regular basis. And then, I've been roping in, commodities and traditional markets for you as well. But, understand that when you see other markets playing outside of what we see in the U.S. markets, it usually doesn't last long. If there's something really going on in the U.S. markets that is not so good, you're usually not going to see global markets performing well either. And when you see Dixie rising the way it has been back in that range, just watch where liquidity is going. Just kind of see what's going up, what's going down, what's holding, what's not. And, right now, I think that we're seeing some cash go to the sidelines. This is not a dash for cash or a cash dash, as you would typically see. But if we do see a significant increase in VIX for traditional markets, and then Dixie, maybe even playing around this 99.5, 99.60 to, 100.4, and then reject at the same time, just, watch where money's going, because it usually park like it did in Q1 2025 to Q2, that March to April, right? That Q1 to Q2 transition. What did we see? We saw everything sell off, and then cash just parked and then bought the lows and continued that bid to the upside, creating a V recovery. So if we do see a Six Sigma event like that again, I have a strong feeling that we would see a low come in fairly quick, like we did last year, right around the same time. So, but right now, markets are actually holding up for the moment. They haven't skated to the downside yet for traditional markets. Bitcoin holding the range. Obviously, gold, silver are doing well, but trapped inside of those massive higher highs to those higher low structures on longer term time frames. And then, of course, we got to watch oil carefully and see how that trades out through the rest of this week and into next week. And with that, I will wish you a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. And like and share this out there. And I hope to catch you in the Friday wrap up, where I will be looking at some of the longer term timeframes, giving you my opinion on where I'm seeing things going and which levels to watch for this scenario to, in this case, either break back to the upside or break to the downside, and what conditions would need to be met in order to see that happen. So hope to catch you on the Friday wrap up. And of course, every morning, I hope you jump in the chat with David on the breakdown, and myself there when I join in at 12:15 p.m. Eastern, 9:15 a.m. Pacific Standard Time. So see you there. With all that said, Landy out. Take care.